Today, I am going to show you a simple way to use order blocks in your trading. So let's get right into it. So if we look at this chart here, this is a YM. Ignore this top portion. It's not the monthly chart. It is the 1 minute chart in the YM, in the Dow Jones. We're going to go ahead and go through a few examples of how you can use your order blocks, my version of the order blocks, or what I would call high volume nodes, right, in your trading. Again, this is not financial advice. This is just a tool for you to use when you are trading. So let's go ahead and get into it. So as you can see here, price opens up and it starts to make these, again, what I call high volume nodes, order blocks. There's one right here. Again, you identify these how? You identify these by the overlapping candles. The more overlapping candles or accumulation or consolidation, however you want to call them, that is an order block, right? This is an order block. As we mentioned in the previous video, this is an order block as well. You have another order block forming right here, right now, right? Overlapping candles, very easy to spot. This is how you would spot them. How do you trade these, right? So how do you trade these? So as soon as price starts to show an aggressive move to the top, then you want to take your position, right? Let's say you can be aggressive and try to get in here, right? You're gonna put your stop below the low, right below that, and you're gonna try to aim for a 1-to-1. For the most part, 1-to-1s are pretty frequent, right? With the YM, with the Dow, you have to understand the way it moves. With the ES and the NQ, also you have to understand the way it moves. It could be 1-to-1 works best. It could be 1.5 works best for risk to reward. In this case, YM 1-to-1 does work a little bit better. So you see it start to form here. You could also take and wait for confirmation on this big candle here, this aggressive candle. Now you're gonna have more risk, and that 1-to-1 might be a little bit harder to attain. But if you are trailing properly, then you can definitely get something out of this trade, right? So you see, if you would have entered here, it's going to go up, come back in, goes up a little bit more here, and now here's the way you trail with these. Very simple, trading with the structures as they're forming, right? You see it form, it made this another order block here, right? And then it pushed up aggressively. As soon as it pushes up aggressively, all you need to do, put it behind the last order block, right? Now you're risking 40 ticks, 40 points for 155 points. And so here you go, or 155 ticks. And now you have this order block forming. You start to see it come against you. As soon as it pushes up, you can do one of two things here. So you can put your stop loss at this low, or, and this is another thing you could do, or you can move this. You can make your stop loss the high of this block, right? You can do those two things. Break even, great. You'd be a little bit more than break even, right? You'd have some profit in there. So if it does come against you, you get taken out, and it won't stop you out. Now, keep in mind that price tends to test this top area of the blocks, right? So it'll come down here, it'll test this, and then it'll bounce away. Now, if it breaks the low, then that means that structure failed. It is not going in that direction, and so that trade is no good, right? So you get this happening quite a lot in the lower time frames. You get this happening in the higher time frames. The weekly chart, it happens in every single time frame. It is your job to identify the best ones for your trading session. Now you can get in a couple of ways, as I mentioned. You can get in with the breaks of the structure. You can get in with a fair value gap. You can get in with whatever you would like. However, just keep in mind that every trade is going to be different. Not every trade is going to work. Not all the confluences are going to be there all the time, right? So this is a good example here, right? It is consolidating here, and then now it's coming back down. Now we're looking to see what happens when it tests this order block, right? So it's coming down here. It's making smaller order blocks as it's coming in. Now it's testing this high. Here's where you need to be patient to see what happens. Whether it pulls back up, you want to see it break this high, right? If you see it break this high here, right, let me see here. If you see it break this high here, then you can put your stop below the last low, right? because it already tested this, it failed, it went back up, and then you can go to whatever risk reward you're looking for. In this case, it did not. It went back up. It did not break that, continued down. Now we're going to look for a break of the slow, try to reach to the beginning of market open. That would be the ideal scenario, right? So we're waiting for the break of the low. You see this candle, wait for the candle to close so you get some signal, right? If the candle closes strong towards the bottom of this is not strong, this is weak, it starts to come back up. Now you see it's testing this next high volume node area, this next order block. It's testing it, pushes down, we're waiting, and the next candle comes, it closes right there, perfect. Get in right there, put your stop above the last high volume node area, which is right above here, this is fine because this is the rejection area, right? And so now you're aiming again for a 1-to-1. We have 85 points away, 85 ticks. So we can do 85 ticks and you hit your target. And this one, you can try to squeeze as much out of it as you can. In this case, if we would have squeezed the most out of this trade, close to a 3-to-1, right? But 2-to-1 is probably best for this one. You're not going to get that all the time. That's why I personally go for 1-to-1s. I've noticed that 1-to-1s work better for me. Again, everybody's risk tolerance is different. So I would just base it off of your risk tolerance. Whatever you're willing to risk, however long you're willing to hold, then do that, right? I'm not here to tell you how to trade your trading plan. So I'm just giving you the tools that you can use when you're using order blocks, right? This could be something you can implement in your trading. This could be something you can use and see and identify how structure is working. I know you mentioned here that a trending day makes these order blocks. So a trending day makes these order blocks. It'll make an order block right here, right? So it'll make an order block. It'll go ahead and consolidate right there. And then it'll push up, right? And then consolidation. We talk about trending days, and then it'll push up, and then it'll consolidate. And you can see this happen every single time when there's a trend happening, right? And this will be pretty clean structure that you can trade. Now, when it's choppy, it'll do this, it'll come back up, and it'll stay in this larger range, right? And that could be because of a lack of liquidity. So just be cautious when you're getting into these trades. So here you go. You see another order block here. If you extend this out, you see price respect this area, right? You see price respect this area. Again, you can use Fibonacci, you can use whatever you'd like. The way I see these gaps, for example, this gap here, I see that as a push up. Now we're looking to see if there's a consolidation here for the next either leg up or retracement to the downside. Because here, all of this is, I would consider an order block, right? So I would consider this a massive order block because this is the last session, last time price sort of chopped around and consolidated prior to the move, right? So that's how I see this and that's how I view it. You don't have to view it this way, but that's helped me understand price a little bit better, right? So here, again, price rejected this small little order block here and then came down, rejected again. You could have entered here, put your stop. Let's go ahead and get the tool. You could have entered here at the rejection, right? And put your stop above the high, 54 ticks, 54 points. Try to aim for that low to see if it breaks. That would have given you a 4-to-1 risk to reward. That is a good trade after this large push down. I'm not looking for any fair value gaps, as you can see, because there's one right here, right? There's one fair value gap here. You could have taken it off of the rejection here. I don't use fair value gaps. Again, I use order flow. So I use the tools for clusters and big trades and volume profiles, high volume nodes, low volume nodes, value area high, low, the POC. I use those to identify the structure, right? To see where the most participation was taking place and see what the participants are doing. So this is how I view order blocks. I hope that this helps you identify trades in your trading. And again, this is not financial advice. This is just a tool you can use in your arsenal of trading during different scenarios. So I hope you've learned something from this. I hope you can use this in your trading sessions. And please don't forget to like, subscribe, and share. And I will see you in the next one.